Today is an important update for all of our investors in the Zinc Income Fund. This week, I've had several conversations with investors who are concerned about the headlines they're seeing. So I want to walk you through exactly what's going on, nationally as well as inside the Zinc community. Let's start with the big picture. Right now, the national news cycle is full of stories about rising foreclosures and consumer strain. CNN reported 2 days ago 32% year-over-year increase in foreclosures. Foreclosure starts are the beginning of the process, up 6% month over month. Another outlet also reported that foreclosures are up 20% from last year. And in October, 36,000 properties were in some stage of foreclosure, up 3% month over month, and up 17% from 2024. More than half, 52% of all seriously delinquent loans are FHA loans. Consumer debt is at an all-time high. Delinquencies are rising across multiple categories, and CNBC is reporting signs that the job market is weakening. So yes, there's some national concerns, but here's what actually matters for you and me in this fund. There's some great news, and let me explain it to you. The Zinc Income Fund deliberately exited 38 states. Any foreclosures that we currently have, which are small, are currently outside of California, in markets that we no longer operate in. All of those files are already in the fourth quarter of the foreclosure process and will be ending by Q1 of next year. What we did do was pull back into what we call the Zinc community. 11 counties surrounding our headquarters right here in Central California. These are the markets that we, my team, and I understand extremely well. I've been investing here and rehabbing here since 1996. Over $1 billion of lending, 450 flips. I understand this area very well. The Zinc community, that's where our borrower relationships are the strongest. It's where our off-market division continues supplying opportunities to repeat investors. And here's the key point. All of our loans, except for one, everything else is performing in California. Let's talk specifically about the Central Valley, where we operate and where we're doing 70% of our business. The Central Valley, because the numbers here are very strong. In September of 2025, existing home prices here in the Central Valley were up 10.2% year over year. That's right, you heard me right. Right here in our Zinc community, 11 counties, home prices are actually up 10% year over year. They are up 0.1% year to date. The median home price here in the Central Valley is $499,000. It's down 0.2% year to date. Nothing. It's holding very stable. This is an exceptionally stable market given the national climate. Inventory here remains very tight. The unsold inventory index in our Zinc community, which is where we focus and do 70% of our business, is at 3.4 months. Still way below market in a very balanced market. Homes are moving here quickly. The median days on market, right here where we operate, listen to this, 31 days. Homes are selling for nearly full asking price with a sales to list ratio of 98.1%. Now, let's zoom out to the state of California in whole, outside of our community. In September, home sales reached 277,000 units. That's the highest number and highest velocity and highest absorption rate since February of this year. It's up 6.6% year over year and up 5% month over month. Southern California saw double-digit sales growth. Pending sales also increased for the second and third consecutive month in a row. The statewide median home price did slip to $883,000, but even at that dip, prices are still up 1.8% year over year. The price per square foot of housing here in California continues to rise every month. It's now at $427, up 0.2% month over month, up 0.7% year over year. Most importantly, buyer competition is returning. The share of homes, this is important, the share of homes sold above asking price has bounced back from a 4-year low. In the counties that make up Zinc community, listen to this, 50% of the homes are selling above asking price. So what does all this mean for you and me? Even though the national headlines look concerning and the national news outlets always this doom and gloom, our fund is insulated. We have tightened operations here. We've come back to our home roots, into the strongest markets with the strongest equity positions. Our California portfolio remains very healthy. values remain very resilient, and the loan performance continues to be exceptionally strong. I would also like to emphasize that within the Zink community, those 11 counties, 9.5 million people, that if there is a problem here, we have our own crews, 7 of them, our own trailers, and all of the Zink community we can get to within 3 hours. We just dispatch one of our crews and we're at the property. That gives us confidence in what we're doing here. We're disciplined. We're cautious. We're making every decision based on data, not news headlines or Google searches. Thank you for your continued trust, and thank you for being part of the Zink Income Fund and investing alongside of me. Have a wonderful afternoon.